Welcome back. Well, quiet for the markets except for the mid-cap index, which is managing to hold its head above the water with a gain of around 0.4%. So let's get talking to a couple of more companies. KEC International is in focus as the company has bagged new orders worth around 2,000 odd crores. We have with us Mr. Kejriwal, who's the MD and CEO of the company, joining in to discuss this particular order win. Mr. Kejriwal, hi. Thank you very much for joining in and season's greetings. If you could just take us through this particular order win of around 2,000 odd crores, which segment is it in? And what does this mean for your business? When does it start accruing to the P&L?
Happy Diwali and a New Year to you. Thank you. And thanks for having me. I think we announced orders of roughly around 2,000 crores and odd, as you said, of which 50% is in our civil business and 30% in railways and the balance in the T&D business. So this takes our order book to around 27,500 crores or something. And we have another 6,000 crores of L1. So put together, we are almost close to 34,000 crores of, order book plus L1.
Right, 34,000 crores of order book plus L1. This 2,000 crore order that you've got, Mr. Kejriwal, what does it take your this year's order inflow to total? Because you had guided for around 16,500 to 17,000 crore worth inflows. So is this part of that plan, or can we see incremental orders coming in as well? Where does that stand at for you?
So with this intake, we are roughly around 10,500 crores, which is in a way 40% more than last year. But I think we are looking at around 18,000 crores. We may probably look at a slightly higher number, but 18,000 is what we are now looking at as the order intake for the year.
And your order book split still stays the same, 60% from civil, rest from railways, 24% from T&D?
No. I think my order intake, my order book today is around 45% is from T&D and roughly slightly under 20% from railways and around 30% from civil, and the rest is cables and oil and gas, etc.
Okay. I just wanted to touch upon what's happening with the export business because, there's disruption in Europe, there's inflation in the US as well as the UK and Europe. Give us a sense in terms of how that's impacting business on the ground for you all.
So it's a very odd situation in the sense that our Middle East market is booming. Even today's order intake has got, I think, 3 or 4 orders from the Middle East. So in terms of market, Middle East and North America, especially the US, these two markets are doing very well. On the other hand, there is clearly a supply chain disruption happening on supplies, especially from Europe. The third piece is the logistic cost. We still continue to be impacted by high logistic cost. They have come down, like we were earlier paying $500, a container before the COVID. It went up to $2,000. Now it's come down to $1,000. So there is still a piece of disruption which is still going on in terms of logistics. But what is also happening is that, markets like US, which we had virtually lost to countries like Turkey and all that, are coming back because of the huge increase in the gas price and the 75% inflation in Turkey, etc. So some markets are coming back to us because of the global disruption.
All right. Just wanted to understand with regards to your guidance for this year, you had earlier spoken about 20% plus sort of revenue guidance, which you had up from 15%. Just wanted to understand if that stays. And you refrained from talking about margins in the near term, even as you guided for double digits, starting next year, as early as next year. Do you want to update the viewers on this?
So Mangalam, we had guided 15%. In our last talk, we had said that we will definitely do 15% plus. Now with the current order intake, etc., I think the numbers will probably start inching towards 20% revenue growth. As far as the margins are concerned, I think the pressure on the margins still continues in the way it was earlier. A lot of old orders are getting executed, and when these new orders start coming into execution, the margins will definitely start inching up. So clearly we'll see some bump up happening in Q4, and next year we still hope that we'll be able to do a double digit.
Okay, when you say bump up, so what would it mean? At least a range that you can provide us when it comes to margins. I think you did around 5.1% on a blended basis in Q1.
So I think difficult to give a number right now, because even now the commodities and all are still very volatile. If you look at copper, someday it goes on by 500, goes up and all that. So difficult to put a number right now.
Okay. All right. The other segment which I just wanted to briefly get your thoughts on was the entire railway space. And the reason I ask is that, we had Mr. Ramesh Damani, talk about how he's bullish on the railway segment. I just wanted to understand from your perspective, what is business looking like within that segment? What is the order inflow? Is there a lot of demand that you're seeing?
So if you look at the railway order inflow this year, I don't have the exact numbers, but we did around 2,500 crores or so. Railway order intake has already happened. We are also L1 in some more tenders. So 2,500, if you put in the context, is last 2 years we had the similar number of order intake in the last 2 years. So we have already reached the last 2 years order intake in the first 6 months. We are seeing a large number of projects being announced by railways, especially on the doubling, tripling, and also on the speed upgradation. We are seeing a clear focus in the ministry on how to increase the speed of trains. And that's resulting into more orders on electrification and, on the track improvement, etc. So I think if you ask me, we are much more bullish than what we were maybe a few months back on the railway segment.
All right, so 20 to 25% is the revenue aspiration that you had from that segment. Where does that stand at now, since you're a lot more bullish? And civil was the next big growth driver for you. Where do things stand there?
So railway will still contribute around 20-25% because we have an overall growth in our revenues, especially in the civil. Civil will definitely double from last year. I think we did around 1,800 or 1,900. This year we should definitely do 4,000 crores in civil. In fact, in today's order intake, what we announced, we have got a couple of water projects and also our third data center order. So I think that's another interesting area which we are seeing looking up.
All right, Mr. Kejriwal, always a pleasure speaking with you. Thank you so much for giving us the clarity of what one can expect this year and hopefully double-digit margins next year as well. Good luck to you. Season's greetings once again. With that, we slip into a short break. As we do that, here's some great news for you investors. You can now track US markets in real time on CNBC-TV18 and moneycontrol.com. Remember, log on to the Money Control website or the app.